What is up, people? Miles here with Keep the Change. Today we're talking about Alibaba stock. It's been an extremely hot stock as of recently. It's around $300 a share here today. It's had a huge run up in these past few months, so we're going to be talking about whether or not you should buy it, sell it, all that good stuff. If you like this stock analysis video, go and check out my playlist. I have a bunch of different stocks that I'm analyzing. Also, let me know what stock you want to see me review next down in that comment section below. The only thing I ask is that if you like the video, go ahead and hit that like button and subscribe as well. Thanks for 50 subscribers, by the way. And if you don't like and subscribe, then all stocks are going to crash next week and it's going to be all your fault. So let's get right into it. Alibaba stock is a Chinese stock, and a lot of people like to compare it to Amazon. People like to say it's a Chinese Amazon. I kind of agree, but there are some differences, so we'll get into that. Alibaba is no small company by any means. It's got around $800 billion in market cap, so it's worth $800 billion. And the stock right now is at all-time highs. It's at $300 a share. And 2 or 3 years ago, I remember this stock being around 150 to 200, and it was stuck in that range for around 2 years, and now it finally broke out this year, being worth $300 a share. Now, one of the biggest reasons that this company has been seeing so much attention as of late is because of Ant Financial. Now, Alibaba basically made this service called Alipay, which think PayPal or something of that sort, and you can use Alipay as a financial service in order to pay for things in stores or online, etc., etc. Alipay is actually the most used digital payment service in China, with 54% of digital payments coming from Alipay and around 39% coming from Tencent's WePay. Alipay got so big it's turning into its own company now called Ant Financial, and Ant Financial is being priced at around $150 billion valuation. Alibaba now owns a 33% stake in them, and they're about to go public, so you do the math. That's a big reason why the stock price has been extremely high as of late, just good news like that. But Alibaba doesn't only own Alipay, they own a ton of different services. So when I was talking earlier about how people compare them to Amazon, that's because they're an e-commerce type company, with over 87% of their revenue coming from e-commerce. So they own a couple different marketplaces. We'll get into it. Their biggest one is Taobao. I'm not exactly sure if I'm pronouncing that right. But Taobao is basically a marketplace similar to that of eBay. There's no membership fee like an Amazon Prime fee. Alibaba doesn't actually make any money off the merchants actually selling their items. It's basically a free platform for everybody in the country to use. Taobao is the marketplace between the buyer and the seller. So when a buyer goes to search for an item, your item shows up. However, how Alibaba actually makes money off of this platform, merchants or sellers will actually pay them in order to rank higher on the search results. So if I'm trying to sell my soul on Taobao, I'll pay Alibaba some money so I can rank higher than other people's souls. And Alibaba doesn't take any money from what you sell. They just take money from what you pay them to rank on the search results. So smaller type businesses and just individuals tend to use the Taobao marketplace in China in order to, send out items that they can on a small scale. However, they have something called Tmall, and Tmall is actually for bigger brands. So on Tmall, if you want to be featured on that marketplace, you actually do have to pay a fee every year, and they take a cut of the profits that you make. So these are bigger type companies that use this service. So this would be something like Nike or Apple or something of that sort. And then you can pay for anything on Tmall or Taobao with Alipay. So it all kind of links together in a unique, interesting way. And they are by far the biggest e-commerce platform in China, as they had around 742 million annual active consumers across all their platforms in June of 2020 alone. And that was up 28 million from the last quarter. So this is a company that's still growing despite the fact that it's already so big. And the way they're actually getting more users on their platforms is that they're targeting less developed areas of China, places where e-commerce may not just be as big or things just might not be as well developed as other regions. And they have a ton of investments over China in general. They have entertainment businesses, they have food delivery businesses, they've got grocery stores of their own, kind of like Amazon Go. They have hotels with no people in them. I mean, seriously, the amount of stuff these guys are in is crazy. And that's why I think they're compared to Amazon actually so often. It's the fact that they're just so diversified into so many different streams. Now with Amazon, they've got e-commerce, they've got cloud, that's usually what you think of, but they also own Kindle, Twitch, Amazon Go, a ton of stuff. So in general, they just are trying to dominate a bunch of different markets at once with their brand name. And that's kind of what Alibaba is doing as well. So one thing that's really helped Amazon as a stock is their cloud business. Their cloud business is by far and away what operates the most profit for them. And this is something that is helping Alibaba extremely as well. Alibaba was actually the largest cloud provider in all of China in 2020. And in the quarter of June 2020 alone, Alibaba actually managed to grow their cloud business 59% in terms of revenue, netting them $2 billion in revenue. Now, even though Amazon makes a ton of profit from cloud, Alibaba actually has not been seeing any profit from cloud. However, it's been announced recently that their cloud business is actually starting to turn profitable. This is a segment of their business growing 50 to 60% that is now turning profitable, which is extremely good news. But it's not only their cloud business which is growing, it's their e-commerce business as well. So for this quarter, with all the businesses combined together, they actually managed to grow revenues 34%. Now, first off, growing revenues at all during this pandemic is something amazing to see. Second off, growing revenues at double-digit rates, that is something you want to see in a growth stock. So they made around $21 billion in revenue this quarter, and then around $6.5 billion just in net income alone, and their net income actually jumped over 100%. Now, a big reason as to why their net income grew so much is the fact that stock prices have been going up, and they said that their investments actually have been going up as well, so that's good to see. So if we look at all of their business segments and how they're growing them, I mean, you see growth rates that are insane across almost every business segment, at least in the ones that matter. Obviously, their biggest is their e-commerce businesses, which all are growing at amazing rates. Then we've got their cloud business, which is also growing at great rates. And then the entertainment and the innovation and others, that's a category we're not too focused on, as it comprises of around 5% of the revenue, really nothing. You may be thinking to yourself, why wouldn't Amazon just go into China and, take down Alibaba from the inside? And guess what? They already tried to, but they actually couldn't even get a foot in the door. People were already so used to using Alibaba services over there that it was basically almost futile for them. So Alibaba clearly has a lead in China, and the Chinese consumer trusts them. And in the same sense, it's kind of the equivalent of saying, like, why doesn't Alibaba just come over to the US? Like, Amazon's already got the footprint here. They've already got the trust, the loyalty, and the brand. So their biggest segment of the business by far, e-commerce, is making around 87% of the revenue with seemingly no competition and no end in sight to the growth. Now, e-commerce as an industry in general, the trend is obviously going up over the next decade. They should be able to see 20% revenue growth for the next coming years easily. Add on to that a cloud segment that is actually growing at insane rates and is about to turn profitable this year, and you've got a recipe for an amazing growth stock. Now, in terms of the balance sheet, how do we know that this company isn't going to go bankrupt? As of June 30th, 2020, they have $54 billion in cash and short-term investments, and they only have $37 billion in total liabilities, which shows that this company is extremely financially healthy. They could pay off all their liabilities with the cash they have and still have $15 billion left over for a rainy day. So you're getting a business with a lot of cash, a ton of growth, a bunch of different avenues for growth, a great brand in China that people respect and know, and you're getting all this for a PE of around 30. Just to put that into perspective, Amazon has a PE over 100. Now, there is a reason that this trades at a very low price to earnings, and that's because it's a Chinese stock. I've talked about this before, but Chinese stocks tend to have a bad reputation within the investing community, and that's mainly due to a lot of Chinese stocks being considered fraud or the fact that they cooked the book. However, Alibaba, I think, is a safe investment. I don't think they're frauding anything. This is quite literally the biggest company in China. If this company is a fraud, I will jump off a building. Okay, that's a bit extreme, but I have a lot of confidence and conviction that this thing is totally legit. I've seen a ton of investors who generally don't like Chinese stocks or don't invest in them actually pat Alibaba on the back. However, it's a Chinese stock. There is always that risk. We've also got to talk about the fact that the US government and the Chinese government do not get along at all. Now, do I think this really affects Alibaba personally? No, because Alibaba doesn't have a ton going on for them internationally. They have a couple things in Asia, a couple side projects, and then they also have AliExpress, which US consumers can buy things off that. However, Alibaba seems to be mainly China focused, and I don't think they're really thinking international at the moment. Not that they aren't at all, but China is where their main focus is. So US government tensions and relations don't really relate to this stock. In fact, that's actually one of my criticisms with this stock. I wish they would do more internationally. You see Amazon going into a lot of different regions, trying to push heavy, and I think Alibaba is doing that as well, but to a lesser extent. Amazon is just going a lot more aggressive, and I think Alibaba just needs to step their game up a little bit. However, this is a stock with great financials, great fundamentals, a great price. Honestly, I think 300 is still cheap. Now, I'm not a financial advisor, don't take my opinion, okay? But personally, I actually did add to my position. At an $800 billion market cap now, this thing's going to $1 trillion, and we all know it. And this stock has run up a lot, which a lot of people find fault in. However, I think the run-up is extremely justified. The company has been doing amazing things, growing revenues and profits year in and year out, and they were stuck in a range of around 150 to 200 for years. Amazon's gone on an insane run. Alibaba deserves a little love too. The growth you get for the price you're paying for this stock is actually immensely good. Usually stocks that have 30 to 40% growth trade at an extreme premium. I mean, look at Amazon. That is trading trading at such a high valuation, people would call it overvalued, right? But in the same sense, it's still growing revenues massively. And so is Alibaba at the same rate. You're just getting it for a lot cheaper of a price. So yeah, those are my thoughts on Alibaba. I think it's a great company and it's an interesting buy for sure. So let me know what company you want to see me do next. And yeah, thanks for watching. Love you.